Hi dear traders! Market participants are anticipating policy decisions on the US Central Bank. To be more exact, investors are especially interested in the Federal Reserve's comments on the agenda for further rate hikes. The rate-setting committee is widely expected to raise the official funds rate by 75 basis points. However, according to the consensus, the regulator is likely to moderate the rate hike in December to 50 basis points. Such expectations have already been priced in by markets, so a sharp response will follow only in case of some unexpected statements. What will happen to market sentiment in the wake of the Fed's meeting? Let's discuss it in our video calendar on InstaForex TV channel. On Thursday, the UK Monetary Policy Committee is due to unveil its policy decision. The Bank of England is likely to decide on a fast rate hike of 75 basis points. It will be the 8th rate round of monetary tightening necessary to mitigate inflationary pressure on the British economy. The annual pace of inflation in Great Britain already stands at the two-digit value of 10.1%. Under such economic conditions, bearing in mind further inflation acceleration, the market will cheer a sharp rate hike. Besides, traders are betting on the pound sterling's strength after the appointment of Rishi Sunak as the new Prime Minister, who revived investors' trust in the British economy. Another important report on Thursday is the information on conditions in the US service sector. The ISM non-manufacturing PMI is likely to log steady growth in the service sector in October, though at a slower pace. Taking into account dismal business conditions in other countries, a decline in the PMI to 55.5 from 56.7 could be considered an evident sign of the strong economy. Nevertheless, investors could neglect the news as they will be digesting the Fed's policy decisions and plans. Moreover, the highly anticipated report to clear up the US economic conditions will be the NONFARM payrolls, which will be released by the Department of Labor on Friday, November 4. During the Asia-Pacific session on Friday, the Reserve Bank of Australia will publish its monetary policy update that will remind traders of the dovish reversal in the rhetoric. On Tuesday, the central bank announced a second cautious rate hike by 25 basis points. Thus, the regulator eased the pace of monetary tightening in September. Inflation in Australia remains at elevated levels, way above the target level. The board of the central bank confirmed their commitment to its fight against high consumer prices by all available tools. Such moderation in the cycle of tightening aroused discontent among market participants. In other words, the Australian dollar will weaken for a while in response to this cautious move of the monetary authorities. Demand for the US dollar could slow as the markets await the crucial report by the US Labor Department. In the early New York trade, market participants are braced for a series of metrics on the US labor market. The forecasts do not promise upbeat readings. The annual rate of wage growth is expected to go down. Economists also predict a downtick in the jobless rate from 3.6 to 3.5%. Employment growth could have lost steam with only 200,000 new jobs created in October on the back of soaring inflation and high interest rates, which makes a negative impact on the economy. Analysts warn about minor employment growth in Canada, which is also due to report on its labor market. The jobless rate could also have increased here. The economy is expected to add just 5,000 jobs. For this reason, the Canadian dollar is set to close the week with losses. These events will be in the limelight among traders in the second half of this trading week. Don't miss our daily news reports to be always in touch with the latest market news. See you!